Nigerian exchange, as the market has kept up its upward trend in the first 9 months of 2022, gaining about 4.1 trillion naira to outperform markets around the world that have experienced extreme volatility. As of September the 30th, the market cap of the NGX increased by 4.1 trillion naira, or 18.6% from its opening value of 22.2 trillion. The Nigerian stock market, meanwhile, has experienced double-digit, the economy, double-digit inflation. There's also foreign currency illiquidity, and of course the tensions around the global market. So we're going to talk about that, plus the impact of the monetary policy rate with our special guest, Muktar Mohammed, who's a financial analyst as investment banker, CEO of Finance with Muktar. It's good to have you again, sir. Good morning.
Good morning. Always a pleasure.
Fantastic. So yeah, I always love talking stock markets with you. As far as the year-to-date return that we've seen, what do you think the triggers have been so far this year?
I think the trigger has been the low price valuation of those equity. The low valuation, because definitely most of those equity are selling below their market valuation. You look at their PE ratio, you look at their earning per shares, and so that's just the trigger. I mean, when you see those numbers and you see the results that some of these companies have posted, I mean, you see there's a lot of value. Why you didn't see it would have been bet bigger, maybe the percentage would have been wider if we had the foreign investors that normally make the market undergo those long bullish run. But we don't know how have the local investors. So definitely those local investors are those that used to play the treasury, the fixed income space. So they are not there for the long time. They are there for the shortest possible time, good entry point, good exit point. But like the foreign investors, sometimes they are there for the long time, for 6 months, for 1 year. Some will even want to stick 2 years when they know that there's stability. The only thing we suffer in the market when you have the foreign investors was like times like this, when the election is coming, you see most of them pulling up their funds because they're looking at who is going to come in. But ordinarily, sometimes they stay for 2 to 3 years.
Okay. Now, we saw the third quarter, we did see a loss though, of about 5.3, 5.4% or so. What would you attribute that to, at least for the exchange?
I think that will have to do with the economic situation around perception. Not that the equities were not doing very well. I think it's the perception and the economic situation. Look at the earning results. Look at the companies that were supposed to pay dividends. They paid those dividends. Look at the performance of those companies. They were very good. The market itself, the fundamental of the market itself was still very strong. But the economy fundamentals is shaky. So, and again, you know, we've not been able to move around this exchange rate volatility to attract investors, even investors in the diaspora. So it's a big challenge. That's why you saw those. And again, those, you know, technically, the world is in a recession. No matter how they want to say it, they won't call it a full recession, but technically we are in recession. So definitely you cannot separate the stock market from the economy. In the short term, it sometimes looks like if the stock market has a life of its own. But to sustain that life of its own, it needs the economy.
Gotcha. Well, I want to ask you about the other, I guess, the competition that the equities market will be facing from treasury bills and bonds. So T-bills, the most recent, I think you must have mentioned just a second ago, but the most recent auction, the 364, I mean, all tenors, they rose, but 364 at 12% from like 9 or 9.5. Your 10-year bond is doing 14, almost as equal to the year-to-date return for the market. So is that going to push some investors towards that end?
Definitely. It will. It will, and it started when the MPC came up with those rates. So we started seeing those movements. We started seeing a lot of people leaving the equity market for the fixed income space. But then again, in the long run, you realize that we are just looking at the returns in average. So some equity in the market has done good return, be above the inflationary rate. Also, if you take a company like Zenith Bank, the dividend yield itself, as when he paid the dividend, was about 14.2%. So, which is almost better than what you are getting in those spaces. In the long run, the equity market seems to have this time. But you're looking at 90 days, We know what people look at. They look at the returns in 30 days, in 90 days, in 360. So they just average it. But then again, they are not looking at the capital appreciation that you may enjoy in some of these equities.
Plus your dividend yield.
Plus your dividend yield. So you're looking at a good price entry point. You're looking at some stocks that are selling at 52 weeks low. And I mean, these are good companies. And you look at some of these companies are evolving into holding structure.
Yeah.
So there's going to be a lot of expansion. So when you look at that, you see what they try to go to. Like I said, is that mentality of the economy, the perception that, look, we're in a very weak economy globally and technically. The world is in recession, even if it doesn't looking like Nigeria is going to go into recession. But the physical side have not been able to meet up with what the monetary people have been doing. So it's really affecting the market. Because if the physical side were able to come up with policy to complement the hike, like what we see in other countries, then we would have seen the market blossom. But what we're seeing is that the physical side the monetary side keep doing what they have to do. The physical side seems to be non-existent.
We've been having this conversation for quite a while. Thanks for putting that in. But it seems like it's best to have a long-term view when you're in this market, because over long term, I guess equities perform.
You know my slogan. It says that the stock market is not it's a marathon, it's not a sprint.
Gotcha.
So definitely you need to have that long-term view if you want to really benefit from what you in the market. But then again, it depends on what your long-term view is like. So, but then I think the long-term view is what will help in any economy at this time. Nobody's going to make quick money in the short term because of whatever challenges globally that is affecting the economy.
Didn't the markets, when Buhari was sworn in 2015, didn't it jump like, was it 8 or 9? They called it the Buhari run or something. I remember the
Buhari run did not run last.
Yeah, it didn't last long.
And ever since then, we've not seen any runs again. You see, what happened there was, there was so much tension in the air. It was projection was that Buhari was going to win. And so then there was a problem that, the former president, Goodluck Jonathan, will not relinquish power to Buhari. So there was that tension. Remember, we're coming from an election year before then that a lot of lives were lost. So the election was more or less like war. At that time, it was war. So when Goodluck Jonathan called President Buhari to congratulate him, and to the market responded,
released his tension,
and we saw that move. And that move could not be sustained because immediately Buhari came in, the oil price went low. Our reserve was low.
The recession followed.
Then we now did devaluation, which he was not ready to do. So we stayed too long, to about 6 to 7 months before he agreed to devaluate. At the time, the World Bank, when he came in, the World Bank was saying that, look, devaluation is about Naira exchange to dollar will be 250. But he waited, he said he doesn't see any reason why the Naira should be devalued. And so at the time he was ready to do it, he went to 360. The only game changer that I saw the equity market enjoy some relatively stability was when the CBN came up with the import-export window, where drive investors, where exchange rate was determined by market forces. So after that, there's not been any physical policy that have helped the market. So that's why.
See, this is why we have you on the show, because it's just very fascinating how all these factors come into play. Can you quickly give us, I guess, an outlook for this fourth quarter for the year? How you see the market playing out?
I think outlook for first quarter, I said investors should do value investment. They should do value investment, look at fundamentals. That's what you should be looking at now. And then looking at, when you're in a recession, liquidity is key. So look at those companies that are going to give you liquidity in terms of dividend payout. Look at the dividend yield by when their results are going to come out and what they've paid before. You can go to their previous history and you see. But I can bet you that most of the companies will pay same dividend because of the economic situation.
So they'll hold back a little bit.
So they'll hold back a little bit. And then when you look at that, compare that to the price that you're entering now, most of those companies might be giving you a dividend yield of over 15%. So it just depends on, but I keep saying value investment is key now.
Very quick, we're out of time. If the election turns one way or another, I think the market might pop again in 2023.
Let me tell you something about this election. I've said it. The three presidential candidates, popular presidential candidates, I'm not writing up other candidates, but you look at the Labour Party, Peter Obi, you look at PDP, Atiku Abubakar, you look at Bola Ahmed Tinubu of the APC. These are tested men that I feel that any of them gets in there is going to turn around the economy. The stock market will be the first to respond.
Okay, it's very optimistic.
Very optimistic about the three of them because they have an economic blueprint. Their record said it. You talk about Atiku Abubakar, you look at what he did when he was with President Obasanjo, the BPA travelers. You talk about Peter Obi, you see what he did when he was governor of Anambra State. You also talk about Bola Tinubu, you can see what he did in Lagos State in terms of economy-wise. So when you look at those three people, and they know that the game changer this time, whatever will make any Nigerian to vote for them, will be what is your economic blueprint to take us out of poverty, to take us out of hunger. So definitely, economy is going to benefit. And these are people that know how to sort for talent. They know how to get the men that can do the job. They are good at getting good talented hand. Tinubu, Atiku, and Peter Obi. So definitely, I am so optimistic that once the election can hold, which I believe it will hold, once the result is accepted, which I believe that market will definitely respond.
All right, we'll see how it's fascinating. We'll see how things work out. Muktar Mohammed, financial analyst, investment banker, CEO of Finance with Muktar. Thank you so much for joining us.